This is Nandis from Dalrymple Input Trading. Today we'll be looking at two large players in the Australian market for investing and the platforms that they provide. One is Vanguard, who's been around for more than 50 years, okay, and the other one is Stake, who is a more recent player in the Australian market when it comes to investing. So today we'll be looking at which platform or which provider, which investment opportunity is better for long-term traders and those that wish to invest into both Australian ETFs, which are exchange traded funds, US ones and the Australian ones, and which one is a better fit. So looking at this, the first one we'll dive into is Vanguard. So basically, they've got over 50 years of global investment expertise, okay, with $16 trillion worth of assets in management, which means this company is very stable. It's not going to go anywhere. It's been around forever and everyone knows this name. Okay, so it's very stable. Now, there are some brokerage fees associated with this. So you can see there's a $9 brokerage on sales. Okay, other fees and costs may apply, but did a bit of research on this particular ETF and this is what I got. So for the Vanguard one, the management fee is 0.07% per annum, effective from July 23. So it's in effect now. And same with other ETFs, including the US ones. So in here, you can invest directly via Vanguard's platform, often with no brokerage fees, or you can purchase Vanguard's ETFs through brokers like Stake or CommSec. Okay, so there's no brokerage fees, but there is that annual fee that they charge at 7%, 0.07 actually, per annum. So let's compare and contrast that one through to Stake, which is another provider we've got. So with Stake, they do charge a flat $3 fee for trades up to 30,000, and above that, it's 0.01% per trade. Applies to ETFs as well. Same goes for the US. One thing to keep in mind is that for FX, which is all funding fees, changing currency between Australian and US dollars, there is that 0.55% FX fee. So as an investor, which one is better for you, right? So basically my view on this is that if you want to invest, and this is just general education advice only, if you want to invest and hold on for a very long period of time, then Vanguard is your go-to, right? The reason being their fees are very low. Okay, what they charge per annum in fees is extremely low compared to other providers. They're a very reputable investing brand. They've been around for over 50 years. They've not had any issues during even global downturns. So that should tell you that it's definitely a very trustworthy place to put your money. Okay, so that this is more for long-term investors in my view. Stake also again can be used for long-term investors, but I do think this is more geared towards medium to long-term holders, purely because Stake is more geared towards investing when an opportunity definitely arises in the market, right? When you can find a place to invest, this is also a good opportunity. And the biggest thing is, I forgot to point out, is that with Stake, you can buy fractional shares. So we'll just dive into the charts now, what I mean by that. So we're looking at the VAS, which is the indexed version of the ASX 200, which is run by Vanguard. So that's the ticker code VAS. So currently it's trading for about $110 per unit of this particular ETF. So assuming I wanted to buy, let's say I didn't have $110 and I wanted to buy half of it, I can do that. Or I can buy a quarter of it. Or whatever amount I want to buy, I can buy. I don't have to buy the full unit. Whereas with Vanguard, it would not work that way. It's whatever you invest would go direct towards the actual cost of the purchase of that unit of that index. So that's the key difference there, that Stake allows you to buy fractional shares, and it's more geared towards, I guess, getting in and out if you need to. Now remember, there are costs associated with getting in and out, those fees that we just discussed. So if you want to buy and hold, Vanguard would be the way to go. If you want to get in for 6 months, get out in 6 months, or you want to get out when you realize there's a correction happening, like if you look on this chart, we can see that if you had bought here in October, the correction happened in February and ran all the way up until April. So if you're a little bit more active as an investor, that could be an opportunity to get out, and then you basically, reinvest once the market starts going back up again. So that's great from a investment point of view if you're using something like Stake. But if you're using something like Vanguard, most likely, you'd you'd need to have the appetite to stick this out, right? Like to wear down this drawdown, to hold up during this drawdown, and then just to, hold your nerves while it's going down, and then to allow it to go up again. So that's the psychological component. And sometimes it's best not to check when you just buy and hold. Let the investment be there, come back to it later on, and see what's happened way down the track. Same goes with the S&P 500. So this is called the SPY. You can invest into this using either Vanguard, which they do have diversified ETFs there, and also using stake as well. So you can buy into this. And I've drawn two circles here. So these are great opportunities, for example, for investors to buy in. So if you're looking to buy and hold as well, again, these are great opportunities, right? We've got an uptrend and then we've got a pullback. Both these opportunities are great times to buy. So I thought I would actually basically share with you guys what I'm seeing on the charts as well. With the current indexes, they're both in a very bullish momentum pattern on both those indexes if you wanted to buy in. So go ahead and check that out. If you want to learn more about investing and trading, please visit my website, dalrympletrading.com. I do provide coaching and mentoring one-on-one sessions for anyone that's interested. But today I just wanted to compare and contrast which platform I would go for. In my view, both these are great. It just really depends on what you resonate with. And for me, if you're a very long-term investor, Vanguard's the one to go. If you're more short-term, Stake's the one to go. So yeah, I hope that you guys got something out of it. Please like and subscribe.